Heard about the new super tax? If your super balance is over $3 million, the government's making moves and they want a bigger slice. We're talking higher tax, and yes, even on money you haven't actually received yet. Let's break it down and help you stay ahead. Right now, most of your super earnings are taxed at 15%, but from July 1st, 2025, that changes. If your total super balance goes over $3 million, the earnings on the amount above that threshold will be taxed at 30%. That's double. And here's the kicker, it includes unrealized gains. That means you could be taxed on increases in value, even if you haven't sold the asset or seen a single dollar. So how will the ATO work it out? They'll compare your total super balance at the start and end of the financial year. Then they'll subtract any contributions or withdrawals. Whatever's left is considered earnings. And the proportion of those earnings linked to the amount over $3 million? That's where the higher tax applies. Even if your money is split across different funds, it's your combined total that counts. So what does this mean for you? If you're aiming for a big super balance in retirement, this tax could slow your momentum. It hits hardest if you're investing in property or shares, things that grow in value over time but aren't sold right away. You could end up paying tax on paper profits even though no cash has hit your account. That's a real hit to your retirement strategy. But here's the good news, you can prepare. First, consider diversifying outside super. Once you're nearing that cap, consider building wealth in personal investment accounts, trusts, or companies. Second, review your SMSF or retail fund strategy. Make sure you understand how your assets are being valued and how earnings are reported. Third, explore tax-effective investments. Things like franking credits or assets with deductible expenses can soften the blow. And don't forget your estate plan. These changes could impact what your family inherits later on. The key is to get ahead of it. Now, what shouldn't you do? Don't panic. Don't rush to withdraw funds or completely overhaul your setup without talking to a professional. This is a shift, yes, but it's one you can work with if you've got the right strategy. You've worked hard to build your retirement savings. The rules might be changing, but your control isn't gone. Now's the time to plan smart, stay flexible, and protect your future. Talk to a licensed financial advisor, review your strategy, and get super ready.